All right, so let's talk about the real estate market and do a little update here. So one thing to note, we've got some news about area median income coming up. So AMI is important because it sets the income levels for different programs, including down payment assistance programs. So the new update is rolling out later this week, so be sure to keep an eye out for updates on that. So moving on to more headlines. First up, we want to talk about the debt ceiling. So after what felt like really an eternity of negotiations, the government finally agreed on raising the debt ceiling. I was really expecting rates to decrease a little bit more after they agreed on that, but it seems like the market really wasn't too thrilled about how close the talks were to that deadline. So coming up tomorrow, we have the next Federal Reserve meeting on June 14th. At the moment, there's really a 25% chance that they'll raise rates, so not really very likely. And then by July's meeting, we're expecting a 50% chance, so there's a higher likelihood of rates raising in July. So then moving on to the economic data that was released last Friday, the job data, including non-farm payrolls, average hourly earnings, unemployment rate, and average weekly hours came in strong, sparking a rally in the stock market. Meanwhile, the bond market seems to be on a seesaw around the 3.7 range on the 10-year Treasury bond, attempting really to find some sort of direction. Now, inflation numbers like the CPI and PPI are eagerly anticipated this week. So CPI was released this morning, showing signs of lessening inflation, with the Fed further voicing their target on getting the inflation rate down to that 2% goal. It seems we're all really just waiting for these inflation numbers to continue their downward direction. Weirdly enough, though, the mortgage rates seemingly increased today on the release of the information. And what about my expectations on rates? Well, breaking the 6% barrier this year could be somewhat difficult and challenging, especially with the recent Fed rate hikes that have continued. We really need some rate cuts to happen to get that farther down this year. And then add on top of all of that, the higher LLPAs, or the fees that were adjusted for interest rates with different credit scores, and we're looking at an increased rate on mortgages. So in the short term, I expect mortgage rates to sit anywhere between 6.625 and 7.25 this month, and then by the end of the year, we might see a drop down to around 6 to 6.5%. It's really going to take some time for these rates to decline, but I'm really genuinely hoping I'm wrong about that. So obviously time will tell. So if you're buying this year, it's really about getting the home and then being able to refinance it later. And we obviously could use a little reprieve from the higher rates in this market.